Hi, I'm Jaime Agostino, and this is Financial Minds Meet the Experts. On this show, we're joined by financial industry experts to talk about topics, trends, and themes that credit union professionals need to know about. Today on Financial Minds Meet the Experts, we're meeting David Brehmer, President and CEO of Vizo Financial. Welcome, David.
Thank you, Jamie. Glad to be a part of this.
Thank you. Today, we're here to discuss the challenges credit unions are facing and how Vizo Financial is assisting. So David, tell me, what challenges are credit unions and the corporate facing coming into the new year?
Well, I had an inkling that you might ask this. So there's obviously a lot of challenges, but I'll break it down into four things that I think are key going on right now. One is this continual low rate environment and the fact that credit unions have so much excess liquidity, same thing that the corporate itself is dealing with. Number two, the cyber attacks just keep increasing. So cybersecurity and all the costs, headaches surrounding that will be a huge challenge in 2022. The lingering effects of the pandemic and the fact that those of us that thought this might go away quickly, we're learning to live with it. And I think 2022, it is going to keep kind of going up and down. So that's going to put more and more pressure on making sure we all have a strong online presence and digital platforms so that members can transact and get information they need without having to go to a physical location. And the fourth thing that we've seen with the increase in quits is this war for talent, so to speak. And particularly, I think filling open positions, credit unions in particular have a problem with frontline staff. I kind of look at them similar to service employees, why restaurants in a lot of service industries, businesses are having a tough time filling roles. Combination of the generally lower pay, but also because they're dealing with the public and there are just ongoing fear about, related primarily to COVID.
Okay. Well, how has Vizo Financial then positioned itself to overcome, the challenges that the corporate's facing?
Well, I think the number one is we went to remote work environment. We actually now have kind of restructured our long-term plans to stay a primarily remote organization with our priority being the safety of employees. Also, just trying to be as flexible as possible and making sure that we've built a culture that kind of helps employees balance kind of their personal needs through this period, along with our professional needs and requirements to get the job done. In terms of investments, we're kind of in the same boat as everybody else, trying to whole lot of money and chasing very little interest rates that look attractive. Now, we do anticipate rates will start going up next year. And what's funny about it, when you're in the low rate environment we're in now, any increase seems significant. So we don't anticipate huge rate increases, but we could see 2 to 3 rate increases. So we're positioning the portfolio to take advantage of that. We've ramped up our internal securities, created a payments risk group to help credit unions oversee all the transactions, wires, ACH, and really spending a lot of time and effort working on our efficiency, knowing that we need to be as efficient as possible to control operating expenses.
Okay. Is there anything that Vizo Financial is doing to help or prepare credit unions who are facing some of these same challenges as far as to get through those as well?
Well, I think the big thing, obviously, when we look at what we do well, money management is one of the prime things that we provide. So we look at ourselves as a trusted advisor. We have tremendous expertise in the whole portfolio management area. We really have offer a variety of investment options. Anything that credit unions could invest in, they can work with someone at the corporate. The beauty of working with us is our employees are not, their income salaries are not based on high commissions, so that we really do feel we can offer great recommendations, trusted advice, and access to any investment a credit union needs. In addition, we have a very strong asset liability management group, so we can help them look at liquidity, look at risk, and really try to, put some of this cash to work that everybody's got that's excess. I'd say in terms of education and training, proud to say in 2020, we offered up to 70 hours of CPE credits. So people that have certifications and need these credits can pretty much get 100% attending Vizo events. We'll, every year we kind of push. In fact, Jamie, we push you and your group to keep putting out more content, because we think that's a real valuable part of what we do. And then in payments, I think the big thing is we are working with our QSO that we own with a couple other corporates to really be positioned to take advantage of faster payments and play a role in being both a settlement agent, but also be able to handle the operational side transaction of faster payments, and that'll allow us to put out our person-to-person product, Paymoli, but really positioning, putting a lot more emphasis on payments. And I would say just a general trend, which I think I see as very positive, is a lot more collaboration is going on now amongst the corporates. We all went through a big hiccup 12 years ago with the financial crisis. Those that are still around and with us are doing quite well, and we are joining together in QSOs and various operations to benefit credit unions and be as efficient as we can.
All right, thanks. One thing that we continue to see is credit union mergers on a consistent, almost daily basis, it seems. What is the potential impact this will have to the credit union movement?
Well, this is, I hate to say this, I've been in the credit union system 42 years. And so I was in the early 80s when we kind of tapped off just under 24,000 credit unions. I remember that time. And there's been a steady decline. I think the big loss, two areas. We lose a voice. Every time we lose credit unions, we lose the volunteer boards, we lose the management teams, and we lose some voice of representing communities. A lot of smaller communities that were really tied to smaller credit unions, rural credit unions, who've been the ones most affected by kind of just the environment. So I also think not only do we lose a voice, we lose kind of local control and representation in smaller communities, which is too bad, because we were really formed around as an industry around representing people that oftentimes were not represented in terms of defining the financial needs.
Well, what do you think are the driving forces behind these mergers? And is there anything we can do?
Well, I think the major, it's a combination of management, management changes. We're going through a big transition of leadership within the industry. A lot of times there's sticker shock. So it's a matter of, can we hire someone to run, given the complexities of what it takes to run a credit union? I'd say the biggest things, though, are really the cost of technology and keeping up with technology, the regulatory burden, and also changing fields of membership. I talked to a lot of credit unions, and when I asked them, specifically, so what's your field of membership? Most of the time, the response starts with, well, it used to be. And so they've gone from kind of it was very clear when they represented a single sponsor company or a very clear group of people. And I think a lot of credit unions have struggled going from kind of the seg-based or single sponsor to more community, because I think it's really critical that credit unions that succeed understand who they are and who they're serving. Because I've always felt that if a credit union is if we're just another financial institution, we're not taking advantage of everything we could be as credit unions, which is a huge asset to our community, however we define that community. And I think we've struggled with that transition. And the transition's been based on economics. A lot of these small companies have gone away, and we've had to make tough choices. But what can we do? I think one of the best things we can do, and surrounding our initiative having to do with CU Access, is collaborate. I'm also been a volunteer at a credit union on their board for 19 years. And the success of that credit union is based on collaboration with a much larger credit union. This credit union that I volunteer at has run off that credit union's core. It's given us the ability to focus on our members and not kind of back office operations. Our goal behind CU Access, the reason we originally got into a core processing service solution, was it was our best way to help small, mid-sized credit unions deal with rising operating expenses, keep down those expenses, but also integrate everything they need to be competitive in a digital world. A lot easier for us to introduce a new service, integrate it into a common core for credit unions. And CU Access is also our goal of getting credit unions talking, sharing ideas, and getting back to kind of the cooperative movement we've been for, since we started.
Yeah. I mean, when I started working in the credit union industry, which was 20 years ago, I believe credit unions, we accounted for about 6% of the consumer financial services market. To my knowledge, I'm not sure if we've increased that number, but we have increased competition along with some fintech. So what could we do as an industry, or what should credit unions be doing to grow that market share?
Well, I think I think we may be at 7. I think I heard recently maybe 9%. Kind of, it's a big pie, but we have not really moved the needle, so to speak, overall. But I think rather than focus on kind of the overall national, I think the key is credit unions need to focus on the market share of their potential, and worry about. And that comes down to defining who is my community. We are a commodity industry. If we go away, it's not like our services can't be, provided by someone else. So very much, and I always emphasize at the corporate, what makes us unique is our people and our field of memberships. And I think credit unions, the better they understand who they serve and the value they bring to that community, the larger market share they can get. So I'm less concerned about the piece of the pie. I'm more concerned when I see a credit union says they have potential membership of 50,000 and they have 3,000 members. So that's really the key. That's how we would move the needle overall if we just really focus on maximizing our potential and making sure we're realistic about who is that membership, what are their needs, because they may be unique. So hopefully that would stem the tide of some of the mergers. But even larger credit unions, the more we focus and understand who's our market. When I sit in small credit union roundtables, large credit union roundtables, oftentimes the discussion both groups is we're not large enough. And I think what we have to realize is industry, we're kind of an affinity group industry. We're not going to compete with B of A on B of A's terms. So we've got to we have to create our own terms and succeed along those lines as specialty financial services, whether we're 10 billion in assets or 10 million in assets.
All right, thank you. Let's circle back to Vizo Financial. What goals, objectives does Vizo Financial have set for 22, and what strategies are you implementing to achieve them?
Well, I think in 2022, during this year, we kind of took the time to reevaluate what we do best, really did a kind of deep dive critique into the company to identify where we're the greatest value to credit unions and where credit unions look to us most for support. And that really came down to narrowing our focus in 2022 to money management, anything having to do with the investment of funds. Obviously, lending, which is a huge part of what a credit union does, that's not something we specifically support, although we provide every credit union liquidity through lines of credit. We also have a partnership with Loan Street to provide loan participations. We also have an investment owner in CU Business Group that helps credit unions get into commercial services, also loan participation. So we have money management, payments. We're putting a lot more emphasis on payments, and our big kind of strategy for 2022 is to really have the software written so we are able to leverage ourselves as an aggregator and provide credit unions access to the faster payments movement. Education, clearly ramping that up, and we've got set up our first TechCom, which is our attempt to introduce what we think are fintechs and organizations that provide products specifically geared towards natural person credit unions. We want to introduce those companies to credit unions in an educational format. But I'm hoping most of our credit unions can really count on and look to the credit union as a resource for learning about what are the trends that we're all facing and how best to deal with those. Whether or not we're providing that service, we want to provide education on where they can get those solutions.
All right. Is Vizo Financial or its QSO looking to add any additional services or make any enhancements to any of their current offerings in 2022?
Well, I think as I mentioned, from a service perspective, the big focus will be getting more credit unions buying into the CU Access Core, which ties into a lot of other products. The faster payments, we should have out Paymoli, which is our P2P product, but that really needs to be tied into the faster payments. A lot of our focus in 2022, given the environment we're in, will also be internally. We operate on some of our key operations are still on different platforms, and so a lot of focus will also be upgrading to web-based solutions, which will be an enhancement for the credit unions that are already, say, on deposit capture or other products that they use through the corporate, trying to streamline and upgrade those. So those are much more automated systems, a lot more access to products that are self-directed from the credit union perspective. And we have a big push in terms of risk management and enhancing what we do to oversee transactions so that we can safeguard the members and identify anything that looks suspicious as a kind of added value to what we provide.
All right. Well, David, thank you so much. I really appreciate you taking the time to chat with me today. And I'd also like to thank CU Access for sponsoring this first episode of Financial Minds Meet the Experts. Your members share a common bond, but what about credit unions sharing a common bond with other credit unions? With a common core solution, CU Access, your credit union has access to core resources as well as a community where core users can come together to learn and collaborate through various resources all in one place. Learn more at www.cuaccess.org and join the CU Access community today. Thank you again, David.
Thank you, Jamie. Have a great rest of your day.